day. Welcome to Financial Accounting 3. Today I'll be taking you through the statement of cash flow, which is International Accounting Standard number 7. Let us now look at the objective of this standard. The standard requires that the movement in cash and cash equivalent should be the one only reflected in the statement of cash flows, and it should be distinguished between operating, investing, and financing cash flows. The standard also requires that all entities, so there's no exception, must present the cash flow statement in their financial statements. Now, let us look at the learning outcomes. After you study this topic, you should be able to prepare the statement of cash flows. You should also be able to disclose the note that reconcile the profit before tax to the cash generated from operations. Now, let us look at the overview of this standard. What are the fundamental principles of this standard? Statement of cash flow, which is International Accounting Standard number 7. All entities that prepare the financial statements must present the statement of cash flow. That is very important. And the statement of cash flows should analyze any changes in cash and cash equivalent during the period. Now let us look at the presentation of the statement of cash flow. Cash flows must be analyzed between operating, investing, and financing activities. So in other words, this will become our structure when you prepare the statement of cash flow. Each and every company that has prepared the statement of cash flow, their cash should be analyzed between operating, investing, as well as financing activities. So whenever you're asked to prepare the statement of cash flows, you'll be expected that we should be able to see what are the cash flow from operating activities, what are the cash flow from investing activities, and lastly, we will expect to see what are the cash flows from financing activities. Now let us look at the interest as well as dividends received and dividends paid. So the standard allows these to be classified as either operating, investing, or financing activities. The only issue that the standard stipulates is that if in the current year you classify these as an operating expenses, you can't go in the next period and you want to classify them as investing activities. In other words, there should be a consistency. So when it comes to the taxes, so the standard allows that this is normally classified as an operating activities unless they can be specifically identified with financing or investing activities. For operating cash flow, direct method is encouraged, but indirect method is also acceptable. So there are two methods when it comes to preparing the cash flow statement or statement of cash flows. You can use direct method or you can use indirect method, but the standard specifically states that direct method is encouraged when it comes to operating cash flow. Components of cash and cash equivalent should be disclosed, as well as the reconciliation presented should be disclosed on the statement of financial position. Netting off of cash flows, all cash flows should be stated at a gross basis, not netted off. We will see this when we go through the actual example, that you must go and look for the gross amount. So in other words, you cannot net it off. Now let us look at the class example. First thing first, we'll first look at the required, then we'll come and look at the content of this class example. Here's the required of this example. There are two required. Required number 1, they want us to prepare the statement of cash flow of Money Limited using the direct method for the year ended 31st December 2019. And required number 2, they want us to prepare the note to reconcile the profit before tax to the cash generated from operations. And in bold letters, after the required, they're indicating to us that we must show all calculations. This is very important because when they say show all calculations, there might be marks allocated for calculations if you don't show any calculations, then you end up losing all those marks. So make sure you make it a habit of showing all calculations whenever you're doing accounting. Let's look at this class example as to what is provided. We are given the statement of financial positions with all different transaction, assets, equity, and liability transactions. We are also provided with a statement of comprehensive income, and when it comes to the statement of comprehensive income, it is very important to know that we are given revenue. After revision, then we are given profit from operations, and then investment income, finance charges, profit before tax and income tax expense, and profit for the period. So as you can look, cost of sales, it is not provided, other expenses is not provided as well. So with the information that is provided before us, we should be able to calculate the cost of sales as well as other expenses. We're also provided with statement of changes in equity. We are going to use this information to calculate our cash movement. Over and above the financial statement, which is the statement of financial position, statement of comprehensive income, and statement of changes in equity provided, we're given additional information. The first additional information that we're provided is property, plant, and equipment, and it is very important to know that we are given carrying amount as at the end of 2018 as well as at the end of 2019 with various assets. Additional information number 2, we are given depreciation amounts, and they are indicating to us that this depreciation is included in the operating profit. Additional information number 3, we're provided with the information that computer and office equipment with a carrying amount of 6,000 and vehicles with a carrying amount of 2,000 were sold during the year. Additional information number 4, operating profit include profit on the disposal of assets which amounting to 38,000. Additional information number 5, new property, plant, and equipment were acquired to maintain operations. Additional information number 6, trade and other receivables include. So we're given the trade and other receivables, the gross amount, provision for doubtful debts, as well as South African Revenue Services. When it comes to trade and other receivables, it is important to note that the trade receivables given on additional information is the gross amount, whereas the trade and other receivables given on the statement of financial position, it was given on the net amount. And remember, I've just indicated when you're looking at the principles that when it comes to cash flow statement, we work with the gross amount, not the net amount. Then additional information number 7, trade and other payables include the trade payables itself, which is the gross amount, accruals, as well as the South African Revenue Services. And once again, we are back at the required. So what is required? Now we know what is required. We are required to prepare the statement of cash flow statement using a direct method for the year ended 31st December 2019. And required number 2, they want us to prepare the note to reconcile the profit before tax to the cash generated from operations. Now let us look at how does one approach this type of question. What type of technique or exam technique one can use in order to answer cash flow statement and be able to finish within the time that you are provided. I will suggest that the sensible thing or the sensible approach that you can do is first, draft the outline or the structure. We know what are the components of cash flow by now. We know that you need to disclose cash flow from operating activities, you need to disclose cash flow from investing activities, and you need to disclose cash flow from financing activities. And the last part, on the cash flow statement, you need to indicate the movement in the cash for the year. So when it comes to those components of cash flow statement, let's start with the operating activities. You need to know what do we disclose on the operating activities, investing activities, financing activities. And also, just at the back of your mind, you need to know that we're more interested in the cash, in the bank entry as to what transpires. So if you go to the statement of financial position account and you go line per line item for each transaction on the statement of financial position, you should be able to determine, reading with the additional information, as to what will be the bank movement. And that's what we're interested in, because the standard stipulates that only the movement in cash and cash equivalent should be reflected in the statement of cash flow. So we're going to look at the calculations, and we'll explain as we go line per line item. Now, let us start with our calculations. First thing first, we'll look at the cash flow from operating activities, where I've highlighted. I just want us to focus on the left-hand side as to what is included or what comprises of cash flow from operating activities. As we can see that we need to calculate our cash receipts from customers, cash paid to suppliers and employees. We also need to disclose investment income, finance cost, calculate dividends paid, and taxation paid. In the next slides, we'll be doing this calculation. But it's, as I've indicated, that one of the techniques that you can use is first to put the structure or the outline as it is, so that when you go and do the calculations, which we're going to look at it in the next slide, then you just transfer the amount. For now, let us not focus on the amounts. The amounts, we're going to deal with the calculations as indicated here, calculation number 1 until calculation number 4. So we're going to look at it later on, but what is important is what comprise of the cash flow from operating activities: cash received from customers, cash paid to suppliers and employees, net investment income received that relates to operation, finance cost that relates to operation, dividends paid, as well as taxation paid. Now let us look at how cash received from customers was calculated. In order for one to be able to calculate the cash received from customers, you need your current year revenue. You should get it on the statement of profit and loss and other comprehensive income. This amount will be given to you, as well as the movement in trade receivables. In order to determine the movement in the trade receivables, there are two ways you can do it. You can use the T accounts as indicated below. So if you're using the T accounts, you must know that trade receivables is an asset. Trade receivables is an asset. Therefore, the opening balance will be on the debit side and the closing balance will be on the credit side. The difference between the two will be your cash movement, which you will take into account revenue. If you take revenue given and the difference of 2,353,000, which is an increase. How do we see whether it's an increase or decrease? So if you look at the trade and other receivables, the opening balance was 17,127,000, but the closing balance was 19,480,000. So we can see that trade and other receivables have increased by 2,350,000. So in order for us to determine the cash received from customers, we'll take our revenue as well as the movement on trade and other receivables. One other thing which is important is to note that the trade and receivables amount, as I've indicated, is the gross amount. Where do we get that? We get it from additional information number 6. We don't go and use the amount on the statement of financial position, because the amount on the statement of financial position, it is the net amount. One of the key issues when it comes to statement of cash flow is that you must use the gross amount. Now that we have calculated the cash received from customers, this amount will be disclosed under cash flows from operating activities as cash received from customers. Calculation number 1, 102,208,000. The next calculation that we're going to look at is cash paid to suppliers and employees. Now let's look at calculation number 2, cash paid to employees and suppliers. Before we look at the amounts, first thing first, you need to know what comprises of cash paid to employees and suppliers. You need your cost of sales, other expenses. Once you got those amounts, then you need to add your non-cash items. Then lastly, you need to take into account the movement in working capital. And what is important is that with regard to the movement in working capital, we realize that trade and other receivables is not taken into account here because it has been taken into account on cash received from customers. So if you look at the cost of sales and other expenses, if we go back to the statement of comprehensive income here, you will realize that, as I've indicated, that we are given revenue and profit from operation. So in other words, we're not given cost of sales and other expenses. In order to determine that, we just need to go back and look at how does the statement of comprehensive income is calculated. So you will know that you will need your revenue less cost of sales. That will give you the gross profit. Then you add other income, you less other expenses, and then you can get your profit from operations. So we're given revenue, we're given profit from operation. And then the difference between these two amounts, then will be our cost of sales and other expenses. So we needed to calculate it as it was not provided. So if you take a revenue amount, which is 104,561,000, and you less your profit from operation, which is 5,330,000, then you get cost of sales and other expenses. Here is the amount that I was talking about. Cost of sales and other expenses is given by revenue less profit from operation. Then you will get the amount and you disclose it here on cash paid to employees and suppliers as the amount reflecting cost of sales and other expenses. Before we deal with non-cash items, let us first look at the movement in working capital. And in order to do that, we'll need to go to our statement of financial position and additional information. In movement in working capital, first thing first, let us look at inventory. So if you go to the statement of financial position, our opening balance of inventory was 15,100,000 and the closing balance was 15,933,000. We can all agree that our inventory has increased by 833,000. Where do we get this information from? From the statement of financial position. If you go under current assets, you will be able to see that our inventory balances, which is the opening as well as the closing, it's reflected here. So in 2018, 15,100,000, 2019, 15,933,000. So inventory has increased. So now let us go and look at trade and other payables. There's an additional information that has been provided with regard to trade and other receivables. So we're going to look at that. Just remember, I've indicated that we use the gross amount. So first thing first, if you look at the statement of financial position and you see trade accounts payables, this amount disclosed here, it is the net, it is not the gross. If you go to additional information number 7, here, trade and other payables include this amount. So we can look at the movement of trade and other payables. 2018 was 10,119,000 and 2019 was 8,991,000. So trade and other payables has decreased. 10 million, 119,000, 2018, 2019, 8,991,000. When we look at accruals, it was 5,064,000 and now 6,670,000. We can agree that it has increased. So this should be reflected here in the movement of working capital. Accruals, increase in accruals with 1,606,000. When it comes to trade and other payables, it has decreased by 1,128,000. Now, let us look at non-cash items. The first item that we're going to look at is depreciation. And when it comes to depreciation, we've added all the depreciation on the additional information, and that will give us 1,999,000. So from additional information number 2, all depreciations were provided, so we just need to add them. Coming to profit on disposal of property, this was also provided in note number 4, as it indicates that operating profit include profit on disposal of asset. Here's the information regarding the disposal of assets. So any profit determined on the disposal of assets is a non-cash item, and it needed to be adjusted. It needs to be adjusted when it comes to calculating cash paid to employees and suppliers, because it has been indicated that operating profit include that profit. Even depreciation, we're adjusting it because it has been included on the operating profit. Provision for doubtful debts, we also get it from additional information number 6 under trade and other receivables. So it is a movement between 3 million and 2 million. 3 million was for 2018 and 2 million was for 2019. So the movement is 1 million, which is a non-adjusting event. So that all in all, it comprises of our cash paid to employees and suppliers, and if you add all these amounts, it will give us 98,625, which needs to be disclosed again on the cash flow from operating activities, here reflected as calculation number 2. And the difference between cash received from customers and cash paid to suppliers and employees should give us the net cash obtained from operations. So that's how the net cash obtained from operation is calculated: cash received from customers less cash paid to suppliers and employees. Now let us look at the other transactions that are disclosed under the cash flow from operating activities. We have investment income and finance cost. There's no calculations on this one because this is provided. This is provided under the statement of comprehensive income. If we go to the statement of comprehensive income that is provided to us, we have been given investment income 750,000 as well as the finance charges. So those are the amounts that has been disclosed under the cash operating from operation. So it means that this investment, it relates to operation, and the finance charges as well relates to operation. These two amounts is given. So if you're writing and you want to earn a quick mark, this information you didn't need to calculate it. So once you deal with the structure, then you can start by putting these amounts, as long as you know where to disclose them, because cash receipts from customers, we calculated it; cash paid to suppliers, we calculated it. So the other thing regarding the calculation is you can do the calculations on the face of the solution, or you can do the calculation separately, as I did here. It's up to you. At the end of the day, if you are awarding marks for calculation and you've showed it, because the question say show all calculations, then you will be awarded those marks. So again, just to recap, investment income, finance cost, we got it from the statement of comprehensive income. This was provided. Now we're going to look at dividends paid. I'll explain that in calculation number 3. Now let us look at the dividends paid. I'll explain it using the T account. You can also do it the way it's done here. It's also acceptable. So shareholders for dividends, if you go to the statement of financial position under current liabilities, you will see the account shareholders for dividends. So the opening balance, there was no amount for shareholders for dividends on the statement of financial position. This is what I'm referring to. So if you come to statement of financial position under equity and liabilities, shareholders for dividends, opening balance, there's no amount. Closing balance, it was 32,000. That was the closing balance. So now, if you want to calculate how much dividends was paid on cash during a particular year, so I'll take my opening balance, which there's no amount, and take my closing balance, which I'll debit it. Why am I doing that? Because shareholders for dividends is a liability account. Liability opening balance is on the credit side, closing balance is on the debit side. Now we need to go and determine, was there any dividends declared during the year? Was there any dividends declared during the year? From the information that is given to us, if we go to the statement of changes in equity, here, there is a dividend declared of 418,000. If there's a dividend declared, then we need to credit it. We need to credit it to our shareholders for dividends account. So the 418,000 is going to be credited. As I've indicated, opening balance was 0. We saw that on the statement of financial position. Closing balance was 32. So the balance between the two, so credit side is bigger, which is 418,000, and we balance it here, and the balance is the bank. In other words, then the dividends that was paid during the year is 386,000, and the dividends will be disclosed as well under cash operating from activities. The dividends will be disclosed under cash flow from operating activities. The amount of dividends paid, 386,000. They even show it here in the calculation on the phases. For 18 less 32,000, what I did on the calculation number 3, I wanted to explain as to how is it calculated. Next, we're going to look at the taxation paid. We're going to look at, now let us look at taxation. We need to calculate as to how much was tax paid in cash. In order to do that, there are 2 ways again to do it. We can use the T accounts, or you can use this format. For explanation purposes, I'm going to use T account. First thing first, if we go to the statement of financial position, that is provided to us in this question, if we look at the line transaction under non-current assets, we'll see that we have a deferred taxation. So that means it's deferred tax asset. So if it's an assets account, then in order to deal with it with regard to calculating the movement, then this will be our opening balance compared to our closing balance. Then the difference between the two will give us 1 million. It will give us 1,519,000. Opening balance of 2,474,000, closing balance of 955,000. And here's the movement when it comes to deferred tax. If we go to SARS account is a liability. So opening balance will be on the credit side and closing balance will be on the debit side. So if we go to the information provided to us if you go to the information provided to us on additional information, let's start here on trade and other receivables. We have SARS account amount 225,000 in 2018 as an opening balance. So if it happens that the SARS account is receivables, it means this will be the refund to our business. This will be the refund to our business. If we proceed and look at additional information number 7, trade and other payables, the closing balance of SARS account is 33,000. So for calculation purposes, if I have to explain here opening balance, we won't have any amount because it was a refund. It will come to the debit side. Closing balance given at 33,000, and we need to determine the income tax for the year, which is 2,045,000. This is provided on the statement of comprehensive income. On the statement of comprehensive income, here is the income tax amount. It needs to be credited on the SARS account in order for us to determine taxation. So the movement in deferred tax is 1,519,000, and the movement here on the SARS account is 1,887,000, and the difference between the two should give us 368,000, which is disclosed as the tax paid for the year under cash flow from operating activities. So in a nutshell, this is how cash flow from operating activities was determined. Next, then we're going to look at cash flow from investing activities. First thing first, let us look at what are investing activities. Investing activities are the acquisition and disposal of long-term assets and other investments that are not considered to be cash equivalents. And where information is available, cash paid to acquire property, plant, and equipment should be distinguished between that cash that is relating to the replacement and that is relating to additions. In other words, when you have assets that you have replaced and when you have assets that you have acquired, when you prepare the cash flow from investing activities, you need to separate it. Again, when it comes to the cash flow from investing activities, let us look at what it comprises of. Investment, we'll look at the statement of financial position as to how this is comprised of. We have replacement of computer and office equipment. We'll go and look at the calculation, replacement of vehicles, replacement of property, plant, and equipment, and we have proceeds on disposal of property, plant, and equipment. For now, we don't need to worry about the amounts. Let's worry as to what is disclosed under cash flow from investing activities. It's all about replacement, proceeds. There was no acquisition. Where do we get this information from? If we read our additional information, which we're going to go to it. In order to calculate the replacement, let's start here from information, additional information number 5. New property, plant, and equipment were acquired to maintain operations. And if we go to additional information number 1, we're given property, plant, and equipment carrying amount as at 31st December 2018, as well as carrying amount as at 31st December 2019, buildings, computer equipment, vehicles, as well as plant and machinery. Again, we're given depreciation for all those assets. So now we're going to do the calculations. We'll use the T accounts to determine whether there was any replacement or not. It is very important that we do that calculations for all the assets so that we can see whether there was any replacement, or additions. Let's start with buildings. This is an asset, so the opening balance that is provided is 210,000, and the closing balance is 32,000, and the depreciation which we're getting in from the additional information is 247,000. So there was no movement on buildings, no new buildings, no replacement on buildings was done. Then let us move on to computer equipment and office equipment. Again, we're going to use the T account. Opening balance was 482,000, closing balance 345,000, depreciation 185,000, and there was a disposal. Where do we get the disposal amount? It is provided on additional information number 3, that there was a computer and office equipment with a carrying amount of 6,000 was disposed of. So the movement, which is the cash movement, is 44,000. These 44,000 will be disclosed here under the replacement of computer and office equipment. In other words, we bought additional computer and office equipment in order to replace the one that was sold. That is computer equipment and office equipment. Again, I'll emphasize that you can use either of this method to calculate. Whichever you're comfortable with, use it. Plant and machinery, opening balance was 70,127,000, closing balance was 19,480,000, and the depreciation was 941,000. So then we have the difference of 327,000, and this 327,000 will also be disclosed under replacement of plant and machinery, 327,000. Now let us look at the vehicles. The vehicles opening balance was 1,645,000, closing balance was 2,057,000, depreciation was 626,000. There was a disposal on additional information number 3, which indicate that vehicles to the value of 2,000 carrying amount was disposed of. So it gave us the balance of 1,040,000, and this will also be disclosed here as the replacement of vehicle, 1,040,000. Lastly, let us look at the proceeds. There was a sale of vehicle together with the office equipment. So in order for us to determine how much was provided, what we're given the carrying amount, 6,000 for office equipment and 2,000 for vehicles. That gives us 8,000 the total, and we were given the profit on sale of these assets as 38,000. This information we're getting from additional information number 4. So the difference between the two, so if we take 38,000 and we add 8,000, should give us 46,000. So we received cash to the value of 46,000. That's why we need to disclose it as a proceeds on disposal of property, plant, and equipment. So those are the activities that has occurred under cash flow from investing activities. Now let us look at the last part of our cash flow statement, cash flow from financing activities. So these normally comprise of the borrowings that we have as long as the share capital. So we're going to look at the calculations in the next slides. One other important thing is to look at your cash movement. You will realize that the cash at the beginning of the year was 9,762,000. This was given to us, and at the end was 11,902,000. This was given to us on the statement of financial position. If we go to the statement of financial position, cash at the beginning, cash at the end, and that will result in a movement in the cash for us as a net decrease in cash for the year. So now let us look at the interest-bearing borrowings. If we go to our statement of financial position and non-current liabilities, then we have liabilities in the form of interest-bearing. If you look here, we started with liabilities of 69,000, now we have 44,000. So the difference is what was paid regarding these interest-bearing borrowings. So if we look at the calculation, you can use the T account to see the movement. In the next minute, I'll be showing you that. So if we look at it, say opening balance, because it's a liabilities to be on credit side, closing balance 44,000, the balancing figure is 25,000. That will be the cash movement, the cash paid. Then let us look at the share capital. You will realize that in the solution there's no capital, but it is very important that one goes and look at the share capital. So the share capital, it is provided here in the statement of changes in equity. So if we go to the statement of changes in equity that was provided to us and we analyze the statement of changes in equity, you will realize that we have a share capital. Opening balance 29,312,000, closing 29,312,000. So there were no additional share capital. In other words, our share capital didn't change, it remained the same, hence it was not disclosed. So the disclosure part, it will only be interest bearing when it comes to cash flow from financing activities, where we're showing the movement, of what we paid, which was 25,000. And the cash for the year movement, it resulted in a net decrease of 2,140,000. Lastly, let us look at the reconciliation, the note to the cash flow statement, which was required. Now, what we're doing here, we are reconciling the profit before tax with cash generated from operation. So we need to arrive at the net cash from operation. So this amount should be the same as the one that we calculated from cash from generated. So in order to do that, we must get our profit before tax, which we get it from the statement of comprehensive income, add non-cash items. We have depreciation, investment income, finance cost, profit on disposal of assets, and provision, and then we take into account the changes in working capital. All these changes we've worked out on the cash paid to employees and suppliers, and the depreciation amount we calculated also there, the total amount. Finance cost was given, and investment income was given as well. Profit on disposal, it was given on additional information number 4 as well. Then this must take us to the cash from operation. The amount disclosed here should be the same as the amount back here. We are reconciling this amount. This will conclude this session.